Welcome to Market Matters. I'm Nadia Hassan, together with Sulhi, Azman and Charlotte Chong, is joining us a bit later to tell us what's inside Asia stock of the day. But first, we'll start with what company was in the news. Again, it was flat. I don't know why we keep picking all these flat ones. But this was a piece of interesting news. 155 it closed at YTL Power International Bhd. The share price has been climbing by 30% since end August, but if you know anything about this company, Sulhi, I'm sure you know that it's more dividend. That's what people love about it. They love the war chest, right? The gigantic war chest it's carrying on its shoulders.
It's a dividend play stock, basically.
Yeah, so the interesting thing about YTL Power was that it announced that its Paka power plant has won a bid for, they call it temporary. They call it like a temporary 34 months capacity by the Energy Commission to starting March 16, 2016. So the funny thing about this was YTL Power International was the first company in the country to receive an IPP license. And because of that, they had the first and the best terms in called take-or-pay terms. Basically, no matter how much they generated, Tenaga had to take about it. Their agreement, as we talked about on the show, expired at the end of September. And you wondered, what can you do? It's not as if you can, I mean, what can you do aside from like mothballing the plants or dismantling them or you know, and the land itself is an issue because apparently it belongs to Tenaga. But yes, now it has been given a reprieve in the sense that now it has 34 months to still generate power. I mean, when I saw this, I was a bit dumbfounded. What about you?
Well, you know, the details are quite scant actually. When
yes.
Has said that, you know, what is the term of the power plant, for example, the term they're going to supply, and number two is that are they going to be fully utilizing the whole capacity, because the two plants combined is 1,212 megawatts.
But it's only Paka that actually got the extension.
Got the extension, but not Pasir Gudang, suggesting that it has not been renewed.
So what does that mean, right? There's that gap. It got expired and now they have a few months. What's that gap for when they start selling in March 2016? You know, I have so many questions about this because does this mean that we do not have enough power? That's why we actually need to kind of renew the plants over and over again. I mean, why do this when, you know, at one point people were complaining about how high the reserve margin was?
I mean, to be fair also, you know, I think the EC also announced that some tenders has also been given to other players like 1MDB and also Malakoff, but I mean, that was in the news. But I mean, concerning to YTL Power, there's a lot of questions lingering around, especially the terms, and especially, you know, they also have an arbitration case against Petronas, you know, where they're going to supply gas to the power plant in Paka.
So maybe this gap is to settle all of that. I think that's what they're looking at. But again, you don't want the same issues as you did when this deal was first signed. It's the oldest plant. Why not give a newer plant more? Or is it because everybody is running at capacity? Is that why you feel the need to actually, you know, to go and extend? And the fact that you don't give the terms, I think that is very, very suspicious.
So, I mean, they have yet to reveal, and there's a lot of transparency that needs to be given.
Yeah, definitely for the power industry, because you have to remember Tenaga at the other side as well. Tenaga has to get good terms because ultimately who pays? It'll be us. Anyway, so just to bring it all home, so basically Paka Power Station, owned by YTL Power International, has been given a lifeline in the sense that 34 months, they're going to start from March 2016. They're still going to supply power to the grid. This is after this historic PPA agreement expired at the end of September after 21 years, one of the best terms apparently. And Alliance DBS, of course, which we didn't talk about, but I was reading the reports for it, they said there's no near-term catalyst for this. And they themselves have a hold on the company. But now moving on to our Inside Asia stock of the day, talking about little companies, although YTL is not little. What is it that they've
SKP Resources Bhd today. Well, this company is actually a Johor-based electronics manufacturing services provider, and they manufacture electronics products to accompany big brands like Sharp, Sony, and Hewlett-Packard. Now, when we look at the share prices has actually went up 114% to 1.38 ringgit since a year ago. And this is also because of the company has backed two contracts from Dyson, UK-based Dyson, to manufacture cordless vacuum cleaner. But of course, investors will ask the question, it has rallied 114%. Where is the upside of this company? But Insider Asia believes that the good news, although it's already pricing to the share price, but they say the investors can still look forward to rising dividends and also good earnings visibility and solid balance sheet.
Are you excited by this, Charlotte?
I am very excited.
Yes, I can tell. You were really jumping in to see the company. But I don't know. I looked at this, right? Contract manufacturers. Do you think they're still too low down the chain? What else could be the upside to it? Like you say, 114% up, right?
But the company, okay, like what you say, what else can they do, right? They have already actually been more diversified in the plastics industry. A year ago, in October last year, they have acquired Technique Group's 3 subsidiaries for 200 million ringgit. And the group say that now they are able to diversify its customer base spanning various sectors. Now, when we look at the net profit and the revenue in the first quarter of this year, it actually went up 84.5% revenue to 243 million. And profit actually went up 85.6% as well to 17.9 million after factoring in all these profit and also all these revenue from the subsidiaries.
I don't know. Have you ever heard of this company, Matt?
This company, SKP, yeah, I've heard. I think, it's I mean, talking about plastics industry, basically, it's...
Do you like plastics?
I believe in plastics. I am as bullish as Jonathan Gunn when it comes to plastics industries.
Okay. And I also like this stock because SKP has a long record of giving dividends more than 50% of its net profit. And with this payout ratio and new contracts secured, yield will increase to 4.8% from now at about 1.4%. And there's room to grow as well because its Sulhi plant is only 35% utilized.
So do you think maybe capital appreciation versus dividend yield? Which one is it?
Dividend yield, yes. Definitely investors will look at dividend yield. To take it all away, in a nutshell, share price up 114% to 1 ringgit 38 cent now. Insider Asia like this stock because they say investors can still look forward to rising dividends and good earnings visibility moving forward. Yield to increase to 4.8% from 1.4% currently.
Thanks a lot for that. And that's all we have for this week's Market Matters on a Friday. Thank you very much for joining us. I'm again Nadia Hassan together with Sulhi, Azman and Charlotte Chong. If you actually want more on the stories we've all talked about, there's theedgemarkets.com. Actually, you can look at a lot of our videos, our past videos, because we've been talking a lot about these stocks off and on for the full story. Of course, we have the physical copies of The Edge Daily and The Edge Weekly coming out tomorrow. Thanks a lot for that, guys. Good night.